Meanwhile, the toy retailer Mastermind filed for creditor protection today, and that move will mean some stores will be closing. We're going to talk a little bit more about that with Mark Cohen, the former CEO of Sears Canada, who's standing by. Before I get to Mark, I just want to get to the specifics here on this Mastermind story. This is a toy retailer which operates 66 locations, is owned by private equity firm Birchill, had been looking for new owners, but a deal did not come together, and it follows a recent bankruptcy filing for furniture retailer Bad Boy. We've also seen American chains struggle in Canada. Both Nordstrom and Bed Bath & Beyond shut down their Canadian operations this year. Mark Cohen is the former CEO of Sears Canada and Director of Retail Studies at Columbia Business School. Mark, thanks for being with us. I'd like to start generally with how you would describe what's happening in the retail landscape right now.
Well, we're coming to the end of another action-packed year. An eventful year. I would have to say that not knowing exactly how things will turn out, I agree with your former guest who points out that on an inflation-adjusted basis, retail sales are down. The tale of two cities is playing itself out. The haves, the luxury shopper who was very exuberant at the beginning of the year, has backed off a bit, and the have-nots, the folks who live close to paycheck, are struggling. And even though inflation has abated somewhat, prices are still high. Wages have not caught up with inflationary prices. And here in the U.S., we've got student loan debt that's coming due. So I think we're looking for a muted holiday season, despite the exuberance some would like to share with regard to this Black Friday kickoff.
You mentioned haves and have-nots. I wonder if that phenomenon plays out with retailers specifically as well, because I alluded to in the Canadian most recent data, it looked like sporting goods, for example, was softer. And even today in Canada, we saw a well-known toy retailer file for creditor protection in Mastermind. Recently, we had seen a furniture retailer in Bad Boy file for bankruptcy. Is this the kind of time where some of those discretionary spending choices get tougher for consumers?
Well, I think we're still dealing with a COVID-19 hangover. Much as we'd like to think that the pandemic is way in the past, in point of fact, there was this enormous well up of spending in sporting goods and in home furnishings, which then abated when the pandemic abated. There was a big bubble in apparel and accessories as people came out and about, and that's abated. And the discretionary businesses, notably apparel and accessories, have been very tough all year. And judging from the intensity of pre-Thanksgiving promotion, so-called Black Friday promotion, which here in the U.S. started in the beginning of October, it would suggest that business, which has been tough this fall, is very tough right now. And for retailers to file for bankruptcy pre-holiday suggests a tremendous struggle on some retailers' part who can't even harvest their holiday receipts to get them through year end. So it's going to be a challenging fourth quarter for many. There's even some notoriety surrounding this alleged monetization of real estate by the Bay, or by the Bay's parent, HBC, and some nefarious financial gossip surrounding their parent low pay, no pay behavior, causing some of their vendors to put them on credit watch. So I'm not sure what to expect in the next 4 or 5 weeks, but to say going to be tough sledding for many retailers who did not have a positive trend going into this fall.
What, at the end of the day, Mark, we heard about some of those court proceedings in retail, and we also highlighted, at least in Canada, some decisions to leave the Canadian marketplace. When executives are ultimately feeling up against a wall, what are the determining factors that go into, whether you ultimately have to go through some type of bankruptcy process, or at what point, when you've made big investments, particularly in a particular country, when you decide to make the decision to pull out? What goes into that?
Well, you live and die based upon your ability to accurately forecast sales and gross margins against reasonable expense projections. And if your forecasts in the cold, hard light of day tell you that you're going to lose money, you have to put yourself in a position of care and cynicism, if you will. And then, of course, if you're constrained by your funding, your balance sheet is under pressure. Your lenders expect you to comply with loan provisions or covenants, if you will, specifically at year end. You come to the conclusion that you're not going to be able to make it. Your solvency, your liquidity is not sufficient based on the current trend of your business to sustain your operations. And so it's a series of cold, hard, and challenging decisions that inform you that you're about to experience a train wreck. And the fourth quarter, the holiday quarter, is that burst of consumer spending, which will allegedly get you out of trouble. And if you can't see your way toward that, you're basically forced to throw your hands up in the air and put yourself into restructure.